Hello everyone, welcome to the channel Sujit Patra Ekdam Real Estates. So in the current video, we'll discuss about the repo rate and its link with the bank home loan rate. Because recently the RBI has increased the repo rate. So it has affected the lending in industry and the banking industries because all of the loan products like personal loan, mortgage loan, home loan, car loan, all the loans products has been affected due to the increase of the repo rate. So what is repo rate? The repo rate actually it is the uh, rate decided by the Monetary Policy Committee of the RBI, which is headed by the Reserve Bank. RBI giving loans to banks and charging interest rate called reported. That means the rate which is charged by the RBI to the commercial banks is called repo rate because the commercial banks takes short-term funds from RBI for giving loans to the customers for meeting their liquidity positions. And for availing these loans from RBI, the commercial banks gives to the RBI a certain interest rate. So that is called repo rate. And these funds which the commercial banks avail, ultimately they will give to the customers in the form of banks loans. And what is the repo rate mechanism and its purpose? Because the RBI decides this repo rate to control the inflation and money supply in the market. So here the commercial banks needs short-term funds for borrowers from RBI. RBI is our central bank in India, and the commercial bank need fund from central bank. So they will avail it from central bank from RBI, and they will give loans to the borrowers. And what RBI does? RBI asks for a certain interest rate for funds given to the bank, and banks pay at the repo rate to RBI for funds borrowed. That means what RBI gives to the commercial banks and the rate at which the RBI gives is called the repo rate. And the banks ultimately it transfer from RBI to the banks and to the borrower. So this is the process of fund flow. So this, if the repo rate is high, then the loans given at a also a high interest rate. That means if the commercial banks avail loan from RBI at a high rate, that means the RBI charge at a high repo rate, then the rate of interest to the customers will be high. Similarly, if the RBI reduce the repo rate, that means at a low repo rate, then the loans given at a lower interest rate. That means what we understood, that means if the repo rate is high, so the banks will give the loans to the customers at a high interest rate, and if the repo rate is low, then the banks will give to the customers at a lower interest rate. So the in both the case the borrower is affected for increase repo rate cases scenario and the decrease repo rate scenario. So actually how the repo rate hike impact on the real estate market, because my channel deals with the real estate market, so we'll discuss about the real estate market and its effect. If the RBI changes the repo rate, then what is the effect on the real estate market? So the basic effect in the real estate market, it affects the demand in the market. So when the rate of interest or the loan rate increases, so obviously it will affect the demand in the market, and the builder's loan becomes expensive. That means the builder's loan what they avail for constructing their project. So that builder's loan also become expensive, and it will they will avail at a higher rate because the repo rate is also getting increased, and the decision get postponed also. That means the borrowers, they will have a wait and watch policy. So they will wait and they will think whether the repo rate will get down. So for taking this type of decision, they will take some time. So ultimately, the decision to buy a home or house or a property, that also gets postponed. What is the impact of change in repo rate on home loans? How it will affect the home loans and home loans customers? So the home loans buyers should know the facts. Every home buyers need to know what they need to know about the repo rate and how it affects them. The generally it happens when the RBI increases the repo rate, the banks immediately increases the loan rate. But when the RBI decreases the repo rate, the banks generally they don't reduce the loan rate. So that's why the in the year 2016, the banks were charging on the basis of the marginal cost of borrowing rate, that is MCLR, marginal cost of lending rate. And but now in from 2019, the RBI has changed the policy and it is linked to the external rate, that is the repo rate. Now almost all the banks now they are charging the loan rate on the basis of the uh, repo rate. So the home buyers need has to know that whether the banks they are changing the rate as per the RBI repo rate, or they are taking at a longer time. So the decision is taking at a faster rate or not, and whether there is faster change of EMI or not, that also the home buyers also needs to know, because sometimes the banks takes a little time for passing the interest rate benefit. So in all the scenario, whether it is on the increase rate or on the decrease side, so we have to see that whether the banks they are taking faster transmission or not. And in the current uh, repo rate increase scenario, the RBI here they have hiked the rate to 35 bps. So these are all the two news clippings of Economic and Times of India. So on this is the current increase by the RBI. If you see the history since October 2020, the repo rate was hovering around 4%. Then again in May 22, it increased to 4.4. Again, it increased to in the month of June, it increased to 4.9. Then in the month of August, it increased to 5.4. Then in the month of September, it increased to 5.9. So in the last changes that occurred on 7 December 22, it has tossed 6.25. So there is an increase of 0.35, and that increase is done to control the inflation, so and the money supply. So if the repo rate increases, so how it will affect the EMI? So that means if a home loan buyers avail a home loan of 25 lakhs for a tenure of 10 years with a loan rate of 7.9% and it has increased to 8.25. That means earlier the rate was 7.9 and after the repo rate increase it has increased to 8.25. This is for an example for how the EMI part has increased. So the EMI part from 30,200 to it has increased to 30,663. So there is a increase of 463. Similarly, for loan amount of 50 lakhs with a period of 10-20 years, if the existing rate of interest was 7.95 and it has increased to 8.3, the EMI has increased from 41,667 to 42,760. That means there is a increase of 1,093. So this EMI part is taking a challenge for the home loan buyers because it is affecting their efficiency for repayment also. So in the current scenario with the rising trend of repo rate, how to deal with the repo rate, how to how to manage our home loan interest rate. So first of all, we have to see what is our long-term goals. If the long-term goal is that to acquire the asset, or we have to go for a higher education, or we have to see the health major treatment. So all the long-term goals we have to see before adjusting the home loan, and we always will try to make some additional lump sum repayment. If we make some additional lump sum repayment, so it will also reduce our burden of EMI repayment. The because there are other banks or housing finance companies, they are giving a options of fixed rate or split loan. You can select either a fixed type of home loan or a split type of home loans. That means in the split type of home loans, you can split from floating to fixed, or you can some percentage you can keep on fixed, or some percentage you can keep on split loan. So mixed up things you can do, or the last resort will be the switch to a different lender for interest rate benefit, for term and all other benefits. You can think of switching to a different lenders. So these are the points we have to ponder while managing our home loan interest rate in the rising interest rate trend. So we have discussed everything about the repo rate and its impact on the home loan segments. So if you like this my video, please consider for like, share and subscribe. Thank you.